The US dollar has long been the backbone of the global economy, functioning as the world's primary reserve currency. But what would it take for the mighty dollar to collapse? While it may seem unthinkable, history has shown us that even the most dominant currencies can fall. Today, we'll explore the potential triggers, warning signs, and consequences of a US dollar collapse, and what it could mean for the world. To understand what could lead to the collapse of the dollar, we first need to recognize its unique role in the global financial system. The US dollar is the world's reserve currency, meaning it's used for most international trade and held by central banks around the globe. From oil transactions to foreign debt payments, the dollar underpins much of the global economy. This status has provided the US with immense financial power, enabling it to borrow at low interest rates and print money with relative stability. However, this reliance on the dollar also creates vulnerabilities. If confidence in the dollar were to erode, the effects would be catastrophic. But what could trigger such a loss of faith? One potential trigger is hyperinflation. If the US were to print excessive amounts of money to finance its debts or fund unsustainable spending, inflation could spiral out of control. When prices rise uncontrollably, the value of the currency plummets. People and institutions would lose confidence in the dollar's purchasing power, leading to a flight to alternative currencies or assets like gold, cryptocurrencies, or even other national currencies. Another scenario involves a debt crisis. The US currently holds over $33 trillion in national debt, a figure that continues to grow. While the US has been able to sustain this debt due to the dollar's status as the world's reserve currency, there's a tipping point. If investors and foreign governments begin to doubt America's ability to repay its debts, they could start selling off US Treasury bonds. This would weaken the dollar, drive up interest rates, and potentially lead to a fiscal crisis. A third possibility is geopolitical instability. The US dollar's dominance relies heavily on trust in the US government and its institutions. Political turmoil, such as a prolonged government shutdown, a constitutional crisis, or an inability to pass critical legislation, could weaken global confidence in the dollar. If foreign investors and governments perceive the US as politically unstable, they might reduce their reliance on the dollar, further undermining its value. The rise of alternative currencies and de-dollarization efforts could also play a significant role. Countries like China and Russia have been actively promoting alternatives to the dollar, including the Chinese yuan and digital currencies. Organizations like BRICS, Brazil, Russia, India, China, and South Africa, have explored the idea of a new reserve currency to reduce dependency on the dollar. If a significant number of nations shift away from the dollar in trade and reserves, its dominance would wane, potentially leading to a collapse. Global economic shifts, such as a major competitor surpassing the US economy, could also challenge the dollar. If China or another economic powerhouse overtakes the US as the largest and most stable economy, their currency could become a more attractive option for global trade and reserves. Finally, a complete loss of confidence in the US banking system or financial markets could trigger a dollar collapse. The 2008 financial crisis highlighted how interconnected and fragile the global economy can be. If another crisis of similar or greater magnitude were to occur, and the US were seen as unable to manage it, the resulting loss of faith in the dollar could be devastating. But what would a dollar collapse look like in practice? The immediate effects would be chaotic. The value of the dollar would plummet, leading to skyrocketing prices for goods and services in the US. Imported goods, such as electronics, oil, and food, would become prohibitively expensive. The Federal Reserve would lose its ability to stabilize the economy, and interest rates would soar. Internationally, the collapse of the dollar would send shockwaves through the global economy. Many countries hold large reserves of US dollars and treasuries. A dollar collapse would devalue these holdings, causing widespread financial losses. Trade would become more complicated, as countries scramble to find a new medium of exchange. Global markets would likely experience extreme volatility, with currencies, commodities, and equities all affected. However, it's important to note that a dollar collapse is unlikely without a significant combination of these factors. The US dollar is deeply entrenched in the global financial system, and its collapse would require a profound and sustained loss of confidence. Historically, even during periods of crisis, the dollar has remained resilient because of the relative stability of the US economy, its military power, and its role in global trade. To prevent such a scenario, maintaining fiscal responsibility, managing inflation, and addressing political and economic challenges are crucial. Global cooperation and sound monetary policies will also play a key role in preserving the dollar's stability. In the end, while a dollar collapse remains a possibility, it is not an inevitability. The US has the tools and resources to address its vulnerabilities, but it must act with foresight and discipline. The story of the dollar is far from over, but its future will depend on the decisions made in the years to come.